And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to my futures family. Happy Tuesday, May the 16th. Our focus here is always seeking accurate context, good risk management, and remaining patient in our trading. My name is John Hoagland. Thank you for trusting me with your time. We're making a couple of changes on the market prep and some of the tools that we're using. We're going back to the old style for at least the rest of this week. We're going to have to miss Jack. Know we're going to miss him. And so we're back to the way things were, at least for now. Top Step TV still on the way. As far as economic numbers this morning, one of the talking feds already spoke this morning. Meester spoke, but did not comment on any economic policy for in the near term, at least. 7:30, the retail sales numbers came out. Core retail sales came out as expected at 0.4%, but retail sales for April came out lower than expected. They were looking for 0.8%, came out plus 0.4%. We are still waiting for more economic data and more talking feds this morning. Bostic is due to speak at 7:55 Central this morning, 8:15 Central industrial production, 9 o'clock business inventory, and talking Fed Barr is due to speak at 9 o'clock. And the housing market index also due at 9 o'clock, 9:30. Talking Fed Barkin will be doing some barking. 11:15, we have Williams, and at 1:30, Goolsbee. So a full day of economic numbers and talking feds. On the mind of traders today, of course, the debt limit talks between the president and the Speaker of the House are due to resume today as the deadline edges closer. Economic data, while it is going to be important and impactful in the markets today, is likely to take a back seat to those debt limit talks. And if they can come to some sort of an agreement, that'd be great. Barrage of talking feds, of course, we know continuing throughout the day and the week. A lot of talking feds this week. Home Depot earnings came out this morning, missing on both earnings per share and revenue. Crude prices seem relatively stable, at least last I looked, as we get news from the Department of Energy stating that they are ready to begin to replenish the Strategic Petroleum Reserve in the August expiration. In August, they're planning on adding another 3 million barrels to the Strategic Reserve. So we'll see how that plays out for crude oil. Some negative numbers in Chinese economy may be kind of contracting or contrasting the news that the U.S. may be purchasing some oil. So really kind of range bound. It's in rollover. Remember that. We've got crude oil and the natural gas coming into rollover as well. This morning, looking at the VIX, it's up about 2% this morning, 1752, but still just a little bit higher than it was yesterday at this time. It was 1737. The dollar index, 102.39 last I checked, a little bit lower on the day, a little bit lower than it was at this time yesterday, which was 102.5. And the yield on the 10-year, up a little bit this morning. Had a nice little spike after 7:30 number, 3.5%, 3.48% at this time yesterday. So no major changes there. As always, make sure that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep. Make sure you subscribe to our YouTube channel. You get notifications when we do go live. Speaking of going live, we do have the Coach's Playbook today, so we'll look forward to seeing you there at 11:30. But before that, a very special Make Hogue Money. We have Tori from Tori Trades joining us today. We're looking forward to having her with us. We're going to be taking a look at the S&Ps. I know most of you know her as a crude trader, but we're going to be focusing on the S&Ps for Make Hogue Money today. I have just put in the link so that you can join the group coaching, or the Make Hogue Money on the Zoom meeting. But of course, you're always welcome to watch and participate on YouTube as well. So we'll be looking forward to seeing Tori here this morning about 8:15, 8:30, as soon as we can get through this market prep. Good morning, Steve. First in the room, winning the prize. Vlad, Scott saw, and he conquered. Austin, Shaw, good morning. Brian, my brother Rick, good morning, sir. Love you. George, Lacey says good morning to everybody as well. Haggle Matters, Bear goes long. Will R. Dimitar, Dan Trader, J. Bill Phillips, good morning. John B. John D. JD's with us this morning. Always a pleasure to see you, my friend. Andy, good morning. Does crude open earlier than the rest? Well, the regular trading hours for crude is 8 a.m. Central Time. 8 a.m. Central Time. Equities, 8:30 a.m. Central Time. Currencies, gold, and treasuries, 7:20 a.m. Central Time for you early birds. Jason, good morning. Robert, good morning. Vince, good morning. Steven, Nastic, JD, futures trading today. Yes, crude opens at 8 a.m. Central Time. Follow Beto, right turn, Clyde. Shy T, Alejandro, Anderson, Joe, good morning. Context, always context, right? Chris, Sarah Hall, prayers and love to you this morning as well. Rusty Golfer, Jason. JT, good morning. Thanks for that picture yesterday. You sent me a picture of a hummingbird on the nest. I don't think I've ever seen a picture or seen a hummingbird on the nest. Beautiful picture. Matthew, good morning. Grounds Hero. Got my coffee here. Brody, James, Khalid, Barry, Mark, Joe, that liquid 50 that was in the book as yesterday. It's back. All right, we'll look for that this morning, Joe, for sure. Pete and the Rooster. Good morning, everybody. James, good morning. So again, Make Hogue Money, big one today. Tori Trades is going to be with us. Looking forward to seeing what she's got going on, getting to know her a little bit, and we'll see if we can make a little money. Good morning, Luis. So without further ado, let's jump into the charts, starting with the daily in the S&Ps. Let's see what we've got going on like Donkey Kong here. Indecision remains. 1, 2, 3, 4, 5, 6 days, really, maybe even 7 in this area of balance that we're in. This market is thirsty. It is waiting for new information. And the biggest information that it is awaiting is, of course, the debt ceiling. Market seems to be in limbo. Will we get news today regarding that? We've already got retail sales out. We got a few more things coming out. Retail sales somewhat, but not hugely impactful. So we're going to be, I think, doing a lot more hanging out and waiting for something to happen. The one thing that does kind of wake me up a little bit to some possible new energy in the equities market here is we added 13,000 estimated new contracts, new open interest yesterday. We kind of sensed for a while there that we may have had a delta divergence. It doesn't look like it at the end of the day, but throughout the day, there was kind of an upward move that was being fought by some of the shorter time frame traders and ended up closing pretty well. So there is a saying right here, there is a glimmer of hope in open interest increase. Take a look at the 30. Where are we now? Well, we've got, I would say, a descending triangle on the 30-minute chart here. We've got even lows. We've got lower highs. Does that mean much? Yeah, it might. It might. If we break out either side of those, it might bring a bigger move. And I'm sure are all anticipating and looking forward to a little bit more volatility than we've seen over the last few sessions here, right? Overnight inventory, maybe a little bit to the short side now, but we're still in range and we're still in value. Now, we talk a lot about how opening in value can create better opportunities as the day goes on. All right, so hang on a second here. So it can, better trade locations sometimes come after the open, sometimes even after the first hour of trade. Here's yesterday's open in range in value. The market drove lower, continued lower. It was in the second half hour where the best trade location of the day came in. Then we started to see our grind to the upside, and you can see kind of here where Delta kind of fell as we continued to try and push higher, which indicates, potential longer time frame buyers. Not seeing anything huge here. There was a hint of it, but the increase in open interest is the one thing that raises my eyebrows to this. Is there an auction process to grade here? There is not. The market is very range bound, so there's no need to assess any longer time frame auction or give it any kind of a grade. So we're opening in range and in value again today, suggesting patience, better trade locations likely to come as the day goes on. So again, this market thirsting for new data. It knows it's over the horizon here, but it doesn't know how far. Descending triangle formation in play. Last week's low in play. This trend line in play. See what happens as the day goes on. You have to keep your ears and eyes on the news, on Twitter, on something. Maybe it's financial juice. Maybe it's something that is going to alert you to if there's any change in the negotiations for the debt ceiling situation. That's going to be, I think, the biggest impetus of a move away from our current levels. Here's the TPO chart. It is coiling. Yes. It is coiling. So, yesterday, normal variation trading day, neutral stance, IB extreme at the low of the session. Opening range was the high initially, so we had a pretty decent move. Did we repair everything that we needed to repair yesterday? Well, we still had an anomaly down here that didn't get checked, but we can't be picky. So here we are, overnight low, overnight high, value low. We are in range, we're in value. Try and stay patient today. I mean, even if we get an opportunity near our overnight low or overnight high early in this session, try and stay patient. And again, keep your ears and eyes to the news. Again, don't forget, we still have talking Feds, Bostic at 7:55, speaking now. Industrial production at 8:15, Central Time, business inventories 9, more talking Feds, housing market index, more talking Feds, more talking Feds. Yes, you're right, Rusty Golfer. Most of the time, if there's news that I know is coming out, I don't focus on the news. I focus on the response of the market. If there is some sort of news about the debt ceiling, it's going to be unknown as to when and if that's going to happen. So I'm going to try and keep at least one eye on that news so that if it happens, I can be prepared to get out or prepared to wait or whatever it is going to be. All right. So again, normal variation, neutral day, looking like we are really range bound here, still short time frame controlled. Here's the crude oil. So it is in rollover. What exactly is an anomaly here, Jason? An anomaly is anything in the profile that sticks out or doesn't seem to fit. Anomalies typically are single TPOs like these that stick out and don't seem to really fit. There can be holes that are anomalies. I would call this somewhat of an anomaly, this hole right here, an anomaly here, an anomaly here, an anomaly here. They show a kind of lack of confidence in any kind of direction is what they tell me. And they are visuals, and markets are very visual. They do tend to be revisited. So here's the crude oil. So it's in rollover. We have to remember that. I'm calling it a rollover range with potential. Volume and open interest are in full blur, but we did lose 3,900 in open interest overall yesterday. Volume is of course low because this is the expiring month, right? But we've got price pretty central inside weekly kickoff levels, inside last week's high and low. The market has a tendency to remain range bound during rollover, again because the longer time frame bigger traders in this market are working on getting a cheap roll and trying not to be very directional. It helps them to do it to get a cheap roll or to make money in their rollover if the market really doesn't move all that much. So rollover range, maybe we're starting to create one here. This trend line is, of course, a deal breaker on that. If we take out last week's low, that could be a deal breaker on that as well. It's not that the longer time frame can keep the market range bound. It's they would rather have it range bound during rollover. Here's the 30-minute chart. All right, overnight inventory, no. Are we inside the value area? Yes. Is there any gap? No. Is there lots of nuance here? Not really. The market is in rollover range, so we're going to try and focus on the extremes of the initial balance. Maybe the first hour of trade. Maybe one of those extremes will provide the best trade location of the day. Again, here we opened. We did kind of leave the best trade location of the day relatively early on the close here. I think the opening range was the low of the session. This was a little bit of a different story. This was kind of a repair day. It was a double distribution. We opened near the lower extreme. We looked to the upper extreme. Days that we open inside of that, we do tend to repair from high volume node to high volume node. All right. So here we go. Again, no overnight inventory, no runs, no hits, no errors, nobody left. Be patient. Overnight low, overnight high, initial balance high and low would be kind of in initial areas where I would start to look. We do have somewhat of a trend line to the downside here. We know we have this trend line to the downside here. This is an area that I would probably be kind of paying attention if price gets to it, up around $71.90 to $72. Here's the the NASDAQ, I should say. All right. So the Maycoke money is at 820 right after the market prep. We'll see if we can't have some fun here. So NASDAQ has a much more friendly to the upside hue to it, doesn't it, than the S&Ps? S&Ps are really range-bound. The NASDAQ is continuing to try and push higher. It added 8,800 in open interest yesterday. The upside auction, although it is moving higher, I'm giving it a C+. With that open interest increase, volume was lower. We kind of expect that when we're awaiting some sort of data, and as with all of these markets, and we say this quite often on the market prep, is one of our acronyms is ACH. Anything can happen. So whatever we're thinking, we got to trade what we see and protect ourselves with stops. Looking at this, my hypothesis would be, well, maybe we've got a little ascending triangle here. If we take out these highs, I could see the market kind of attracting new business to the upside. We've still got a ways to go before we get to the weekly kickoff high here. But the market actually has an auction grade to it because there is an auction to it. It is attempting to continue to push higher. C+, I think, is kind of a generous auction grade. We're not really getting momentum. We're not really building volume. We added open interest yesterday, and that's the only reason it's getting that C+. Yes, James, low upside momentum. Still upside, but how good of a job is it doing? C? average. Maybe a C minus would have been a better grade. The only reason it got a C plus is because we added that 8,800 in open interest yesterday. Here's the 30-minute chart. So in the in the NASDAQ, we've got an ascending triangle. We got last week's high here. We've got a naked point of control that still is yet to be touched. We have overnight recent highs that have not yet been taken out. What are we doing here today? We are in range. We are in value. We are awaiting new information. I'm going to be patient. It's been a very, almost painfully patient week and a half here, hasn't it? Just S&P traders have had very little bigger opportunities. NASDAQ, I would say as well. But we've got an ascending triangle with last week's high, the upper extreme. We gotta think about, is the market going to leave the recent highs at the overnight session? It has a tendency not to do that. Isn't that right, Anissa? So where are we? Middle of value from yesterday. Little change in the perception of value as we await new information. Patience. Let the market establish early extremes. Focus on those extremes for your opportunities. You may not get great opportunities today. We never know. Here's the TPO chart minus the overnight. So yesterday, normal variation, extreme day. We got the points of control higher. Looks like the market is attempting to continue this move higher. We have excess on the low, excess down here. Most of our visuals are going to be lower because we haven't been in this area for quite some time. But again, I'm going to suggest, because we are in range and value, stay patient. If I had to, I would say I'm looking for opportunities to buy this market on weakness, unless that weakness is created by a news event. In that case, I'll wait and see. Gold? What is with this gold? So we had a pretty decent jump in open interest yesterday. The market is by and large, in short time frame, balance, control, centrally located, still relatively centrally located. Last week's low in play in the overnight session. We've got a little bit of space down below to get to weekly kickoff low, which is 1992. Again, adding 13,000 in open interest yesterday. What did it look like on the 30-minute chart? How did we add 13,000 contracts yesterday? It was a open auction. It was a two-sided auction. We added shorts and longs, of course, but it's difficult to decide or decipher which side was the stronger side. The market really just kind of ranged, closed in the middle, looked higher, looked back to the low, looked higher again, closed in the middle. How did we add 13,000 in directional? I don't think we did. Overnight inventory a little bit short, a little bit to the short side. It looks like we closed the gap here on the 730 bar after the number came out. No acceptance of range from yesterday. We might be looking for shorts on highs up here for another potential move back down for another test in regular trading hours here of last week's low. What about the TPO chart? So it's a pretty wide initial balance. The initial balance is, of course, the first hour of trade. And it wouldn't surprise me if the market really kind of settled into this range as we await new information. It's a pretty wide initial balance. The wider the initial balance, the more energy it's going to take to extend outside of it. So again, looking at the range from yesterday, it looks like it's almost twice the range from yesterday already here in gold. So a narrow initial balance didn't take a lot of energy to extend. If something doesn't happen, I'm going to think maybe about trading this day as a normal trading day, as in the extremes of the initial balance will remain the extremes of the entire session. Of course, that all goes out the window with something unusual in the news. Here's the euro. So we had a pretty good breakout to the downside. Yesterday, we had some short covering yesterday. We lost about 3,400 in open interest. So last week's low has kind of put in a lower extreme, at least for now. It looks like we may be setting up a bear flag here. Of course, we got to watch the dollar. Volume has been, it's cut off a little bit yesterday. And again, we lost 3,400 in open interest. So a move to this, a move on low volume, losing open interest in the opposite direction is what the beginning of a bear flag looks like to me. Take a look at the 30-minute chart. So here is our potential bear flag. 1, 2, almost 3 points of contact. 1, 2 points of contact. We're in the middle. We're in range from yesterday. I'm really thinking about making sure that my focus in the euro is up against this trend line and this trend line. It's balanced to break out rules. If we accept above this trend line, we go with it. If we get above it and fail, the destination is to the lower trend line. If we break out below this and accept, that creates the bear flag, and we can see this market continue to the downside. There's still a gap down below and plenty of naked points of control as visuals for this market to look to the downside. Of course, all of this depends greatly on the dollar. Here's the long liquidation B. No, it was short covering. How did we do that? Well, initial balance, the high of the day. We just really spent the day in repair from the previous day. This was a kind of an iffy open. We could have repaired higher. We could have repaired lower. Weak low. Weak low. Weak low. 3 weak lows in a row. Is this market telling us something? Is it getting too short, or is this unfinished downside auction process? Only time will tell. How about the 10-year? Still centrally located. Waiting. It's been building open interest, adding another 15,000 yesterday on a very narrow day. We'd added, we've added well over 100,000 in the last 3 sessions. Still thirsty for info, still short time frame controlled. Here's the 30-minute chart. So we see rates probably leaking to the upside after the news this morning, and we're seeing a nice test to the last week's low. This could be an interesting area for an execution. If we accept below it, we go with it. If we don't accept below it, we could return back to range and value from yesterday. Look at the size of the value area from yesterday. Just tiny, tiny. This market kills me. This market kills me. All right, take a look at the natural gas. We lost about 2,000 in open interest yesterday off this low. We did close above last week's high. Our destination could be weekly kickoff high, which is $2.50. It's a little bit off here. There it is. But again, we are in rollover. The price has come back into a sticky area of balance. I don't know what I think of this market right now. Let me see something here. So we added 11,000 on this day of double distribution. Looked higher, lost about 2,000. Naked point of control. We've opened with a gap. So if we can't close the gap, that nuance says we're looking for opportunities for this market to continue its push to the upside. Here's where the weekly kickoff should be. Why do these things keep moving on me? Last week's high is here, right there. So we're above last week's high, closed above it, seeing potential move for a continuation up to the weekly kickoff high here. What's the TPO chart look like? Excess low, double distribution, no repair yesterday, narrow range, small decrease in open interest, long liquidation, no short covering, weak high, gap. We're going to go with the gap. We're going to look for opportunities to buy weakness in natural gas here today. We'll have to see. So, all right, that is going to do it for the prep this morning. Again, I hope we were able to add a little bit of somewhat accurate context to the market. When the market is waiting for information, context becomes difficult, largely because it can change in a heartbeat. I was listening to a little old jazz this morning because I wanted to remind myself that the beat of the market is rarely 4-4. Sometimes it's 3-4. Sometimes it's 6-4. Sometimes it's 7-4. Sometimes it's 9-8. Just be flexible and take what the market gives you. Be creative enough to accept information that may be contrary to what you already think of the market. And let's get out there and profit today. I'm looking forward to seeing everybody for Make Hogue Money, and we'll get that ready and running here as quick as I can. Let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. Looking forward to seeing you all in a little bit. If not, I will see you later on. Maybe we'll do a recap or a reflection at the end of the day today. It gives me a little more time when Make Hogue Money's early. We'll see about that, and hopefully you'll have had a great trading day. Blessings. Be kind to yourself, be kind to others, and please pray for peace. We need all the prayers we can get. Have a great day.